Good afternoon, everybody. Hope you had a great week. We did see some combines starting to take out some early maturity beans this week, and should see more of that continue in the next week, hopefully. Markets were lower. December 22 corn was down 4 cents per bushel, and November 22 soybeans were down 20 cents on the week. We closed on Friday at $14.26 per bushel. Price held some good short-term support levels to start the week, and we hit a resistance level at $14.88, and then some pretty bad fundamental news came out, and we rejected at that price and melted through support levels to close on Friday. Short-term money flows are starting to bottom out, so hopefully that will relieve some of the negative selling pressure on the markets in the short term. However, strength indicators have broken lower and are making new weakness, it seems like, so that is a concern of mine as we move forward in this market. Long-term momentum indicators are trying to turn over negatively, which would cause some concern for the long-term trend in this market if price is not able to recover quickly early next week. We really need some bullish volume to get price to perk up and prevent these indicators from moving lower like they currently look like they are starting to do. Any rallies back higher may be worth selling a little bit of bushels. We're still at profitable levels, and we should have some good yields here in Iroquois and Ford County this year. Price support is $14.21 per bushel, followed down by $14.08, and price resistance is at $14.38, followed up by $14.59. Managed money sold 7,000 contracts through this past Tuesday, and are now net long 104,000 contracts. So they still are net long soybeans with inflationary times that we're in. In regards to corn, we closed the week at $6.75 per bushel. I mentioned last week in the report that resistance was $6.98, and we were able to hit that early Wednesday morning at about 2 a.m. And price rejected after that and ended up closing the week well below short-term moving averages. Money flows are neutral, so those could really break either way. That means that negative pressure is not over yet, so we could have some more downside room to go here on corn. Strength indicators did violate the positive trend line from July lows for the first time, and so that is showing that underlying strength is starting to decay in this corn market, which is a concern of mine. Long-term momentum indicators are also close to turning over to the negative side, and that is threatening the long-term trend. Perhaps we start to move back lower here and test support from those July-August areas in time. Price support is currently at $6.58. Resistance is at $6.87, followed by $6.98. Those are still really good prices. Should be a high net revenue year for farmers, and so maybe consider liquidating some bushels at those levels if you think that's a good price and you're profitable per bushel at that level. Managed money bought 7,000 contracts through this past Tuesday and are now net long 247,000 contracts. So based on that data, we can tell that managed money is definitely more bullish corn than soybeans based on how many contracts they've bought over the past month or so compared to beans. General updates, the Federal Reserve came out on Wednesday and, as expected, raised interest rates by 75 basis points. The big negative news that took place was the forward guidance that came out of the meeting. Chairman Powell came out and said that they expect at least another 1.5% rate hike before the end of 23. So this really shook a lot of the markets, anywhere from equities to bonds to the US dollar to commodities. Everything had a large effect from that decision. The 20-year fixed farmland rate is now over 7.2%. Last year that was probably in the low 3s or high 2s. The US dollar has surged higher and made fresh new 20-year highs. This is really causing U.S. commodities to become very expensive on the world market. For example, on Wednesday, South American corn was 70 cents cheaper on the world market than U.S. corn, just simply based off of how expensive our currency is right now. And they have a lot better of a relationship with China too, so that doesn't help demand on our side. So South America will most likely dominate the corn market in the world until January when they run out of corn. Chinese lockdowns has also had a negative effect on soybean prices because it has limited demand for soybean oil and crude oil from the United States. U.S. export sales were very weak that were released on Thursday, much lower than what the USDA forecasted, so that was not a bullish fundamental news for the commodity markets. Russia and Ukraine continue to provide some extreme volatility in commodity markets by the geopolitical events that are happening over there. Extreme volatility in wheat. Luckily, we don't have too much wheat planted over here, but that market is moving very fast right now. Crude oil finished over $4 per barrel lower today on Friday, and that came in at $78 a barrel, which was about the lowest level since early 2022. So good to see gas prices coming back down. Potentially on these very oversold conditions, might be worth locking in some diesel prices for the end of this year or early next year, whatever your fuel needs may be. And finally, in regards to crop insurance, the RMA has deferred interest accrual on multi-peril policies for 60 days. So the statements show a due date of September 30th. However, if you choose not to pay it then, you will not be charged any interest until after November 30th. Hail and private product premiums are still due on November 1st, so make sure you realize that those are two separate policies. We understand they're on the same billing statement, but those do have different due dates. The wheat multi-peril application deadline is September 30th. The revenue guarantee per bushel is very good. The initial guarantee is $8.45 per bushel, so very good start to the year on that. May be worth considering planting some wheat, and if you'd like to consider that, please call us before next Friday. And also margin protection, that deadline is also next Friday. If you have any interest in learning more about that coverage, please contact our office. If you have any other questions or comments about your insurance going into harvest, please reach out to us. We'd be more than happy to explain anything to you. We want to thank you for your business, and we hope you have a great weekend.